If you're watching this video, you want to save money when you buy a home here in Colorado. And that's exactly what I'm going to show you in this video. But in order for you to utilize this strategy, you have to understand what a seller credit is. A seller credit is basically money that the seller is giving you to buy down your loan cost. And this can be used for a variety of factors. So let's get into it. All right, now let's say you're looking at a home here in Denver, and the list price in this house is $620,000. Very common price point here for the Denver market. How do you structure an offer? Well, what most people would think to do is to simply ask for a discount. So what they might do is they might offer $600,000. Now that $600,000 largely comes from a loan, because if you weren't using a loan, you probably wouldn't be watching this video. And the most common down payment amount on a loan of this size is actually around 5%. Now you could put down as much as 20%. You could also put down as little as $1,000 here in Colorado. But for most buyers in this price point, we're looking at 5%. And that comes out to $30,000. Now, when you get a loan, the cost of the loan isn't free. And generally in Colorado, you want to factor in somewhere around 1.5% of loan amount in closing cost. In our particular case, we're looking at about $8,000 in closing cost. Now, when you go to close on this purchase, you need the down payment and the closing cost, which means your cost to close is going to be about $38,000. So what's this look like? Well, today's interest rate is, as of the filming of this video, it's about to go down hopefully, but currently it's about 6.5%. So 6.5% is your interest rate on a loan amount of around $570,000. You were looking at a monthly payment with taxes and insurance of right around $4,440 every month. Okay, so this is option number one. Here's option number two, and here's how we're helping clients save a lot of money when they buy a home. Option two would be, instead of offering $600,000, we are going to offer them $620,000. Now, when you have a loan with 5% down, you're allowed to use about 3% of loan amount in seller credits to cover closing costs. So what that means is we're going to ask them for a seller credit of $18,000. All right. Now we still have a 5% down payment, which in this case is going to be $31,000. But there's a few more things we can do. First thing we're going to do is we're going to take this 6.5% interest rate and we're going to lower that down to 5.5%. And the cost to do that is going to be about $6,000. Now the next thing we're going to do is we're going to take this 5.5% interest rate and we're going to get you a 1-year 1% buy down, which means that for your first year of ownership, your interest rate will actually be 4.5%. And the cost to do that is also $6,000. Now we're going to use seller credits to cover all of these things. We can actually use it for closing costs, which are still, by the way, $8,000. So we can use it for the $8,000, the $6,000 here, and the $6,000 here. But wait, I know what you're thinking. 8 plus 6 plus 6 is 20, but our credit's 18. How does that work? Well, as a thank you for watching this video, our in-house lender Origin Point is going to give you a promotional credit of between $2,000 to $3,000 that you can use to bridge the gap. So what we end up having is a down payment of $31,000, no closing costs that you pay out of pocket, and no rate buy downs that you're paying out of pocket. So you're going to close in this house for an out-of-pocket total cost to close of $31,000. You're going to have an interest rate in your first year of 4.5%. Now, the monthly payment on that interest rate for the first 12 months is going to be $38.29 a month. Now, which one of these two options looks more attractive to you? Bringing $38,000 to closing and paying $4,440 a month, or bringing $31,000 to closing and paying $3,829 a month? Obviously, this side is a better option for most buyers. Yes, the purchase price is a little bit higher, but that doesn't really affect you until you go to sell, and who knows when that's going to be. Save the money now. Save money out of pocket and every month when you make your mortgage payment. This is something that works for many buyers in today's market, and it can work for you too. If you have any questions, please feel free to give us a call. I hope to hear from you soon, and whether you need help tomorrow, next week, or even next year, we're here to help. Thanks for watching. I'll see you next time.